Hello and welcome to this presentation. Today we are going to discuss temporary differences. As you can recall from the previous presentation, temporary differences are one of the items we take into account when calculating taxable income, and temporary differences are merely just a timing difference between accounting treatment and tax treatment of a specific asset or liability. Now, when we calculate our temporary difference, it starts off with the carrying amount of that asset or liability, and you get this amount from your statement of financial position based on IFRS rules. Then we're going to deduct the tax base. Now, if you had to draw up a statement of financial position based on the Tax Act, then your tax base amount would be reflecting on your statement of financial position because this is based on the Tax Act. So to calculate our temporary differences, it will be the carrying amount minus the tax base, which gives you your temporary differences. But let's take a closer look at tax base. Now, if we have a look at the tax base of an asset, that will be the amount that will be deductible for tax purposes in future against any taxable economic benefits that flow to the entity when it recovers the carrying amount of the asset. However, it could or will also be equal to the carrying amount when the economic benefits that flow to the entity are not taxable. So if these economic benefits that flow to the entity are taxable, then your tax base is the amount that will be deductible in future. When these economic benefits are not taxable, then your tax base is equal to the carrying amount. If we have a look at our tax base for a liability, it will be the carrying amount of the liability less any amount deductible in future. When it comes to revenue received in advance, it will be the carrying amount less any revenue not taxable in future. So for the rest of this presentation, we are only going to focus on assets so that we can address how that is treated and make sure we understand this before we move on to liabilities. So let's work through a very quick example just to illustrate how the tax base is calculated as well as to show you what it actually is. Now, let's assume that there is this company who has purchased a new computer on the 1st of March 2019 for a cost price of 24,000 Rand. The company depreciates computers over their useful life of 5 years, and SARS allows a wear and tear allowance over 3 years for computers. The asset was ready and brought into use on the same day it was purchased, in other words, on the 1st of March 2019, and the year end of the company is 28 February 2020. So if we start off by calculating our carrying amount, this would be according to IFRS. So this would be a figure that you could obtain from your statement of financial position because the carrying amount is usually reflected on there or is reflected on there. And for accounting purposes, this computer is going to be depreciated over 5 years. So to calculate our carrying amount at year end, we're going to start off with a cost, which is 24,000 Rand. We're going to deduct depreciation, which we calculate by taking the cost and dividing it by 5, being the useful life, and that gives us depreciation of 4,800 Rand. To get the carrying amount at year end, we'll say our cost price minus depreciation, which gives us a carrying amount of 19,200. So as at 28 February 2020, the carrying amount that's going to be reflected on your statement of financial position is going to be 19,200. And this is the same amount that we are referring to when we are referring to the carrying amount that is used for temporary differences. If we have a look at tax, now let's assume we have a tax statement of financial position because for tax purposes, you also own a computer. However, SARS only allows a wear and tear allowance over 3 years. So, according to tax, you have a computer that has cost you 24,000 Rand, and you are now entitled to claim a wear and tear allowance of 8,000 Rand, which is the 24,000 being the cost divided by the 3 years wear and tear allowance that SARS has allowed. This means that at year end, the tax base of this computer will be 16,000 Rand. And this 16,000 Rand will also be or is the amount that is deductible in future. Because that 8,000 Rand that we've deducted, that's already been claimed. That's no longer deductible. It's only the amounts that have not been deducted yet that will be deductible in future. So at year end, the amount that you can still deduct in future on this computer will be 16,000 Rand. Okay, so if we have a look at our carrying amount and our tax base, as well as our temporary difference over time, then we will be able to see a little bit better how everything fits together. Because as you will see when we go through it, we will build up the temporary difference to a point, but then it will start decreasing until it's zero, and it will be zero once for accounting and tax purposes this asset is completely written off. So we know that for accounting purposes or our accounting statement of financial position, we are going to depreciate this asset over 5 years. For tax purposes, we are claiming a wear and tear allowance on this computer for 3 years, and we know that our temporary difference is the difference between our carrying amount and our tax base. So if we have a look at our first year, we see that the carrying amount for accounting purposes is 19,200. Our tax base for tax purposes is 16,000 Rand, and this gives us a temporary difference of 3,200. Then, when it comes to year 2, we're going to have to deduct the depreciation for the year, being 4,800, as well as the wear and tear allowance that we can claim for that year, being 8,000 Rand, meaning at the end of year 2, our carrying amount will be 14,400, whereas our tax base for year 2 will be 8,000 Rand. And this will give us a temporary difference of 6,400 Rand. Now we're going to continue with this process of deducting our depreciation and our wear and tear for every year. So for year 3, we will have a carrying amount of 9,600, whereas our tax base for year 3 is 0. Now, we can only claim wear and tear allowances for 3 years, meaning that when you get to the end of year 3, this could be a little test for you, because when you get to the end of year 3, your tax base should be 0. Because you cannot claim anything else in future. You've already claimed everything, so nothing is deductible anymore. Then when we calculate our temporary difference, it will be the 9,600 minus the 0 for our tax base, giving us a temporary difference of 9,600 Rand. In year 4, we will have a carrying amount of 4,800 Rand. So now our temporary difference is starting to decrease, and now our temporary difference is only 4,800. Then in the final year of our asset's useful life for accounting purposes, we will deduct our last bit of depreciation, being 4,800 Rand, which will leave us at the end of year 5 with a carrying amount of 0. So now our temporary difference is also 0 because the value for depreciation and the value for tax on both sides has been completely written off. Both of them have a value of 0, so our temporary difference is also 0. So as you can see, this is merely just a timing difference in the fact that for accounting purposes, we could depreciate this computer over 5 years, but for tax purposes, we claimed the wear and tear allowances over 3 years. So let's have a look at an example. Here we have Elite Cars Limited, who is a company that specializes in the manufacturing of motor vehicles. And on 1 March 2018, Elite Cars Limited purchased a new manufacturing building amounting to 2.5 million Rand. The manufacturing building was ready and brought into use on the same day, and Elite Cars Limited will depreciate the building over its estimated useful life of 25 years, whereas SARS allows a wear and tear allowance over 20 years. Now, you are required to calculate the carrying amount, tax base, and temporary difference for the manufacturing building for the year ending 28 February 2020. Now, before we move on to that, I just want to highlight something to you. As you will see there, it says the manufacturing building was ready and brought into use on the same day. Now, why is this important? For accounting purposes, when an asset is ready for use, we will start depreciating that asset. However, for tax purposes, the asset must be brought into use before we can start claiming the wear and tear allowances. So before we now actually start with the solution, let's just go through all the information that we have, make sure that we understand what's required of us, and also just recap on the principles and find out which of those principles are applicable to the scenario that we currently have. So first of all, we know that we have an asset. It's a building, so that makes it a non-current asset. Now we know that when we calculate the carrying amount of a non-current asset such as a building, the carrying amount will be the cost less any accumulated depreciation and less current year depreciation. To calculate our tax base, it will be amounts deductible in future. Now, for a building, for example, we could say that we're going to start off with the cost, less our accumulated wear and tear, and less our current year's wear and tear. That's based on that full cost of that asset being deductible over a period of time, which in this case it will be, so we can work on that calculation. Next, we know that the temporary difference will be the carrying amount minus the tax base. So now let's go have a look and actually calculate these figures. Okay, so now that we've gone through the basic principles or we've recapped on them, let's start our question, our solution. So we need to calculate the carrying amount, the tax base, as well as the temporary difference as at 28 February 2020. So let's draw a timeline. Okay, we know that the building was purchased on the 1st of March 2018 for 2.5 million Rand. Then we have a year end at 28 February 2019, but we're not at that current year end. We want the year end for 28 February 2020, so it's another year on. We know that the depreciation per year will be 2.5 million Rand divided by 25 years, which is 100,000 Rand. And our wear and tear allowance will be 2.5 million Rand divided by 20, which makes it 125,000 Rand per year. Okay. So now if we calculate our carrying amount, we start off with a cost of 2.5 million rand. Now we need to take into account the depreciation. But we have to take into account 2 years of depreciation because we are looking for the year end at 28 February 2020. So we're going to deduct the depreciation for the year ending 28 February 2019, which would be 100,000 Rand. Then we deduct the depreciation for the current year. In other words, the depreciation from the 1st of March 2019 up until 28 February 2020, which would be another 100,000 Rand. And that would give us a carrying amount as at 28 February 2020 of 2.3 million Rand. If you don't want to follow this whole process because it can get quite long, especially if we're talking about 20 years and 25 years, alternatively, you could calculate this by taking the cost and multiplying it by the number of years remaining. So we know that we've depreciated this asset for 2 years. That means we're still going to depreciate this asset for another 23 years because we're going to depreciate this asset over a period of 25 years. 2 years have already passed, leaving us with 23 years. Okay, so then we'll say 2.5 million Rand multiplied by 23, and then we divide it by 25, and that would give you the carrying amount at year end 28 February 2020 of 2.3 million Rand. Now, if we have a look at our tax base, we're going to start with the same cost of 2.5 million Rand. Now we need to claim wear and tear allowances for 2 years because we had wear and tear allowance that we claimed for the year ending 28 February 2019, and we had the wear and tear allowance for the current year that ends on 28 February 2020. So if we deduct those two wear and tear allowances, that leaves us with a tax base as at 28 February 2020 of 2,250,000 Rand. Okay, again, this makes sense because this is the amount of wear and tear allowances we have left for the remaining period of our building's useful life in terms of tax. So if we wanted a shorter way to calculate this, we could say 2.5 million multiplied by 18 because we've already claimed 2 years worth of wear and tear allowances, and divided by 20, which gives us the same answer being 2,250,000 Rand. Then as a last step to calculate our temporary difference, we're going to say carrying amount minus tax base. So the 2.3 million Rand minus 2,250,000 Rand will give us a temporary difference of 50,000 Rand.